Patrick Mahomes, you and the Kansas City Chiefs just won the Super Bowl. What are you going to do next?
I'm going to Disney World.
Psych, you are not going to Disney World, Patrick Mahomes. I know that this might be your lifelong dream to win the Super Bowl, be the MVP, and then say on national television that you are going to Disney World, but unfortunately, Disney World is closed. Disney World and Disneyland have been closed since March 12th because of the pandemic. The day of this filming is Friday, April 24th. So Disneyland, Disney World have been closed for over a month and there's been no news, and just from the way everything's evolving, we have no idea when these parks are going to reopen to the public, and when they do reopen, how are they going to reopen? I highly doubt that they're just going to open and let everyone come in without any proper measures in place. So the experiences in Disney World and Disneyland will be a little bit different, especially right when they reopen. It might take years for Disney to be the same. There have even been reports from analysts stating that they don't think Disney World, Disneyland will open until the end of the year, so a reopening in 2021. They also believe, just like I believe, that even when Disney opens back up, it's not going to be the same and revenues are going to be less. This analyst is estimating that Disney is going to take a $5 million revenue hit in 2020 and a $200 million revenue hit in 2021 from their parks. That alone should speak for how big of a company Disney really is. So on this video, we're going to talk about the good, the bad, and the ugly for Disney stock, ticker symbol DIS. Stick around to the end because towards the end of this video, I'm going to give out my recommendation on Disney and let you guys know what I am doing personally with this stock. Now keep in mind, I am not a professional advisor, so you have to do your own research and due diligence before investing or trading in any stock. And one last thing before getting into the video is that I'm going to be like every other YouTuber and ask that you hit that subscribe button, ring that bell, smash that like button, and add a comment below to get those YouTube algorithms really cranking, help grow this channel, and help me better serve you. And also keep in mind, if you're new to investing or if you're looking for another brokerage, check out Webull. It's a great brokerage. It's awesome on the app and on the web base. And if you sign up with Webull with the links provided in the video description, you can get 2 free stocks, with one of those stocks being worth $1,400 potentially. To get started, let's talk about the stock price and look at the charts real quickly. Now, the way that I am going to analyze Disney is going to be for a long-term investment. So over 2 years, typically I like to hold things between 2 to 5 years. So in looking at Disney, its current stock price is $101.40. In the last year, Disney has dropped 23.82%. In the last 3 months, Disney has dropped 25.62%. And in the last month, Disney has gone up 0.74%. Now, to compare Disney to the entire market, we all know that the stock market took a huge dump because of this pandemic, but it has since rallied, and those returns in that 1 month rally have been phenomenal. Now, I know that's looking at it not the full picture because we're still down from that pandemic. We're still in a pandemic and the market is very uncertain. So I don't know if those gains are going to hold. I just wanted to mention that because Disney did not rally like some of the other companies did. And I think that's because Disney is going to be hurt more than most companies. And that is because a large portion of their business is shut down. And a lot of what they do requires people to group together. But that's a good segment into what does Disney actually do. We all know Disney from the characters, the Disney Channel, and the parks. But Disney is much more than that when you actually look at the businesses that they own, which is a ton. Now, when you look at this photo, this lists everything that Disney owns, and it's just so populated. In this video, I'll be very generic. I'm just gonna list the big players in each business segment, but that should provide enough information, and those are the companies, or I should say businesses that really matter, and the businesses that make Disney the most amount of money. To get started, one of Disney's top business segment is obviously the parks and their experiences and their products. That includes all the parks around the world that Disney owns. Their experiences include the Disney Cruise Line, Disney on Ice, and all the other experiences that they offer. And their products includes the licensing and all the toys and everything that you can imagine that has Disney products on them. So that could be a Star Wars action figure, a Star Wars bed set, anything that uses those products. You have to pay a licensing, or you just buy them straight through Disney. Then next up is their studio entertainment, which is like all their movies, which includes all the Star Wars, the Lucasfilms, Pixar, Marvel, any Disney movie. The list goes on, and Disney really has some of the classic movies out there, and they're one of the top players in studio. And then you have media, which includes the Disney Channel, 21st Century Fox. They also own ABC. And then one of their biggest players is ESPN. And then the last business segment is direct to consumer. And this business segment has everyone's attention because of the product that it includes. And that product is Disney Plus. Now, when Disney Plus first came out, and we're gonna jump to the 5-year chart of Disney right now to show how much that stock increased when Disney Plus was first released in the United States. Now, you can see in 2019, Disney went from $114 to about $130 off of news of Disney Plus. It then kind of traded sideways for a little bit until Disney Plus was actually released. And that's when you see Disney go from $130 in October of 2019 to over $150 in early December of 2019. And then after that, obviously the stock has just dropped tremendously, and it's not their fault, it's because of the pandemic. But that just kind of sums up the impact that Disney Plus is having on this share price and how investors are very optimistic about this product. But let's just talk about Disney Plus for a little bit longer, because it's just so important in the future projections for this company because of what it can become. Now, Disney Plus is still somewhat new, and it's probably hard for them to make content right now given the situation that we're in. So unfortunately, they don't have as much content as they would probably like, but they do have one great show, which I watched and I absolutely loved. It was one of the best shows that I've watched, and I'm not lying about this. And that show is The Mandalorian. And we're gonna give you a sneak peek of the second season of The Mandalorian right now, exclusively on the We Are Investing channel.
Are you ready for round 2? Things have gotten out of hand, and I can't clean up the mess for you. It's time for you to take control of your own destiny.
And sign up with Webull and get those free stocks and get started investing right now.
You can't stay with me anymore. And I don't know how many times I've told you
to smash the like button,
not to smoke in the Razor Crest. Are you paying attention? Don't even think about it.
My real father's a not.
You're lucky I'm out of carbonite.
That was actually something Disney made on 420, making fun of the situation. I found it to be pretty clever. I love the show, and I love that little short video that they created. Baby Yoda, the teen Yoda, smoking on some weed on 420. I found that to be great, and I just wanted to include it in this video for some comedic relief. But anyways, back on to Disney Plus. There have been some articles that Disney Plus has reached over 50 million subscribers. Now, this news is released after Disney hit its milestone by releasing Disney Plus in Europe and India. And that just alone accounted for about 28 million new subscriptions. Now, 50 million is a lot of subscriptions. The biggest player in the streaming market is Netflix, and they have 167 million subscriptions globally. But Netflix has been in the streaming game for a very, very long time, and it took them a long time to get to that 167 mark. Now, I know that Netflix came out in a time where streaming wasn't as popular, it wasn't as available to everyone like it is now, and the market was a little bit different. But that shouldn't take away from the numbers that Disney Plus is experiencing in such a short amount of time. But there is a caveat with that, and that is that Disney Plus is getting a lot of subscriptions through their partnership with Verizon. If you are a paying customer with Verizon, you're getting a year free of Disney Plus. So that's going to have some impacts on those numbers. But if Disney Plus is able to produce content like The Mandalorian, and trust me, they do have enough content to run with to make it a very valuable streaming platform and keep people around. I truly believe that Disney has unlimited possibilities on stuff that they can make, including Marvel, Star Wars, Frozen, all your Disney characters, and much more. So I think that they are going to be able to make content that makes it worthwhile to stay with them and also bring more people on board. So let's just play this out. If Disney Plus can meet those Netflix numbers, where does that put them valuation wise? Because I think that is what we need to look at when we look at Disney long term. To do that, let's look into Netflix really quickly. Netflix trades at $424. That's a lot more than the Disney $101. But what's the difference in market cap? Now, Netflix has a market cap of about $170 billion. Disney, on the other hand, has a market cap of $183 billion. So the market cap is pretty much the same, but Disney Plus is nowhere near the size of Netflix. So if Disney Plus becomes very similar to Netflix in size, then the market cap for Disney is going to go through the roof. Now back to Netflix. Its price to earning ratio is about 85. So the share price is trading at 85 times its earnings. When we compare that to Disney, we can see that the price to earnings ratio is 16. So Disney is trading far less than its counterpart in Netflix. Now, I don't think Disney Plus is anywhere near Netflix in the amount of content that they have and the value that that streaming service provides. But that's not to say that Disney Plus does not get to that value. And where Netflix excels, which is in some of the original content, which in my opinion is geared towards people 18 and over. But Disney, as you all know, has so much content for kids. And if you're in a family and you have children, Disney Plus might be necessary just to please the kids. So how many subscriptions is that going to bring in alone? And if your kids are hooked on Disney Plus, there's no way that you're going to cancel that subscription. If money is tight, Netflix is going to drop before Disney Plus drops, if that's a situation. So that makes me feel pretty optimistic about Disney long term when you compare it to Netflix. And that is solely based on Disney Plus. And for all this to work, Disney Plus needs to work. So you have to have faith in that streaming service. If you don't have faith in that streaming service, then you can just take Disney Plus out the equation and you still have a great company in Disney. And that is why I really like this company. So if you haven't noticed by the way that I've been talking about Disney this entire video, yes, I am investing in Disney and I'm going to continue to invest in Disney. But given the current volatility of the market, what is a good price point to enter Disney at? So to do this, we're gonna jump back into the 1 month chart. Looking at the 1 month chart, you can see that we're based on that we only went up 0.76%. We're pretty much flat on the 1 month, but you can see that there was a dip and we did have some level of support at around the $95 range. If you go back to the 3 month, you can see that we had a level of support at the $85 range. Now, my logic isn't going to be super fancy. It's not going to be like a day trader. I'm not going to look at all these trend lines, plot all this stuff for you, make it very confusing, because when it comes down to Disney, we're thinking long term. We're thinking 2 to 5 years from now. And all that stuff, and honestly, is just baloney. People are investing in this company not because of some trend or some fancy line that's drawn on a chart. they're investing in this company because of the business and how it can grow long term. So to be completely honest, if you want to invest at $100 or the current price of $101, that is completely fine. Depends on your timeline and how much you want to get out of this company in return. Now, if you want to kind of play based off of the support levels, and given that this company right now is dealing with some hardships because of the pandemic, and maybe get it for a little bit cheaper, then that's when I would enter in at around $95, average down at $85, and keep an eye on the stock for the next couple months and continue to average down if it continues to drop. But nevertheless, I think $100 is a good buy. I think $95 is a better buy. And I think $85 is a great buy. So I myself am going to hold off until it gets closer to $95. But hey, whoever told you to take advice from a random guy on YouTube? Random guy on YouTube? So from this random guy on YouTube, I hope this video was helpful. I hoped you learned a little bit more about Disney, and I hoped it gave you some insight on whether Disney right now is a good buy. So thanks for watching this video. If you like the content, please hit that subscribe button, ring that bell, smash that like button, and add a comment below. And don't forget about those free stocks that you can get if you hit those links in the video description for Webull. And this is We Are Investing, and together we are invincible.